All right, listen, let's take a look at Bitcoin. This has not been pretty for the last few days, really. Price of this cryptocurrency dropping below 70,000, first time in more than a year. So the latter half of the chart tells you the story as Doug Flynn joins us now. Doug, the co-founder, of course, of Flynn Capital Management. So we've talked about a lot of stuff this week, but we haven't gotten into Bitcoin. And, you know, people who own Bitcoin know this, right, that this has been a pretty big drop. So how do you see this one? Like yesterday we were saying, all right, drop in stocks, buying opportunity. What about drop in Bitcoin? Where do you see the floor, or do you see it?
Yeah, there's an issue. I mean, it's down 50% from its high and 25% year to date. So you know, the issue is that, you know, when you have, remember, this is not an investment in the true sense of the word, because once again, it doesn't have earnings, that kind of a thing. So it's speculation, and right now it's risk off. And when you have that, that's the trend, and it's hard to you know, stay ahead of that. So you really have three choices. You know, do you buy it here? Do you hold it, or do you sell it? And it's depending on what your thesis is. I see some real issues around the 42,000 price point, because that's when all the ETFs came out that track Bitcoin. And so you have a lot of people that came into it at that point. And so that's a real worry. But if your long-term thesis is still there, then, you know, perhaps this is an opportunity where there's that volatility. You know, could there be further downside? Yes, absolutely. That's the trend right now. And so that's the argument if you want to sell it. But people that hold tend to be like, I don't really care what the day-to-day. It's just risk off right now, so I'm going to ignore it. It really depends on what you think longer term, but there is no inherent value in this, and that's part of the problem.
Yeah, well, explain a little bit about what you're talking about there, whether it's Bitcoin or another asset. When you mentioned a number that we just get below 70,000, and you're looking at 42,000, why and what are you sort of afraid of? Like, what are you watching? Are you thinking it's going there? Like, what's the reference?
Sure. So, you know, with an individual stock where you can apply, like, okay, it has earnings, and you can do a multiple and get a valuation where you think it's under or overvalued. Those are metrics that are easy to get behind, and you can make a thesis about that. With something like this, which doesn't have that, we've joked about it before, where it's only worth what someone else is willing to pay you for it. So there's no inherent value to it because it doesn't earn anything, it doesn't sell anything. So it's just speculation. It's a speculation asset. Now that has a place, but so, you know, there isn't necessarily any clear floor based on earnings. But I worry about a number like 42,000 only because that's when, you know, prior to that there weren't the ETFs readily available.
Yeah, these exchange traded funds where you can kind of buy it and sell it like a stock.
Exactly. Inside your, you know, regular investment account, you had to actually have that separate account and hold the actual Bitcoin. Now it was just very easy to buy, but all those people came in starting at 42,000. So if it gets below that, do they hold? You know, I don't know. That remains to be seen. Those people are still up if they bought it early enough. But as typically happens, most people bought this more at the high. So now it's a question of, you know, when do I pull the plug? Do I add more, or do I just ignore it on my statement, which is what a lot of people do.
All right, big story this week, coupled with the stock market, which we'll try to get to here as we get closer to the closing bell. The tech stocks, again, look rough. I want to get a housing story in before we do that with you. This is an interesting headline about homeowners. It turns out they're holding on to their homes longer and longer, okay? But it's really concentrated, especially in the coastal states. What do you take away from this?
Yeah, it's because of the high cost in those areas. I mean, the average you can see is 8.5 years, but in places like Massachusetts and Connecticut, people are staying in their homes for more than 13 years. There it is. In California, over 11. So, and that's because the prices are so high, people can't afford to buy them at these record high prices, which especially are concentrated in those areas. And the affordability, as we know, is not there when you have higher than 6% mortgages. What I found really interesting is there are now more people with a 6% or higher mortgage than there are that have a 3% or less mortgage. And so, you know, those people obviously want to refi when things get lower. But the 20% of people that are sitting at a 3% or less mortgage, you're not getting the inventory to open up for people to buy this and for people to start moving around. So I figured out that I think the real break-even point for people starts around 5.5%. And when you get to around 5% or less, people will move from a 3% mortgage. And here's why. We know that if you have a 6% mortgage with the average home price of around $500,000, going to a 5% mortgage, you're going to save $300 and something a month. But the difference between a house that you have at 3% and now going to a 5% mortgage can be covered if your house that you bought with a 3% mortgage has gone up by more than $100,000 in equity. If you bought it and it went up, which a lot did,
Right.
you take that extra equity, you pour it into the new home, and now even at a 5% mortgage, you could afford the same pay. It's the same payment.
Oh,
So
that's interesting, right. So that's how you get to the 5.5 number on that.
That's
so
how you get to the 5, and you get a 4 in front of it,
right.
then things are moving. Yeah,
Then
for
things,
sure.
okay, that's a really interesting way of looking at that. You know, we got less, what do we have, 40 seconds, I think, until the closing bell rings. So what about this market this week? Again, it's the same thing. NASDAQ's down another 1.6%.
Yeah, it's risk off, it's tech, it's people saying, you know, is the earnings or are the earnings that we looked at all these tech companies really going to come to fruition as AI really starts making its way through? But we're seeing it go to all the other areas of the market, as we've talked about. That's happening. So if you're diversified, you know, as we've said, or if you aren't, start looking at some of those other sectors. It isn't always all tech all the time.
Good stuff, Doug, as always. Doug Flynn, closing bell ringing. As